Aotearoa, and welcome to Monday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news. The modest US inflation rate reported for January is fueling a disconnect and scepticism in US households. But first, this is a week where we get the next RBNZ OCR review on Wednesday. Important because it is Governor Brennan's first. And she will get her first inkling of January inflation impulses on Tuesday and may have the January REINZ data later today. And she will likely know how the bank's consumer and business surveys are tracking, especially on inflation expectations. In Australia, the key data will come on Thursday with their January labour market updates, and the RBA will release the minutes of its February the 4th meeting on Tuesday, always a potential market-moving event. The US Fed will also release its minutes this week, and we'll get the advance estimate for the fourth quarter 2025 US GDP, as well as the Fed's preferred inflation gauge, the PCE. Canada will chime in with its own key releases. In China, markets will be closed for the week-long Lunar New Year holiday from February the 16th to the 23rd, although January foreign direct investment data is still expected to be released. Elsewhere, trade figures are due from Singapore, Malaysia and New Zealand, while Malaysia will also publish inflation data. Over the weekend, China reported that price deflation in their housing market picked up in January for a third straight month at a faster pace, overall down 3.1% from a year ago. In January, the year-on-year sales price of existing homes in the first-tier cities fell by 7.6%. Specifically, prices in Beijing, Shanghai, Guangzhou and Shenzhen were falling by 8.7%, 6.8%, 8.3% and 6.5% respectively. In second-tier and third-tier cities, the year-on-year sales prices of existing homes fell by 6.2% and 6.1%. Prices for new-built houses fell too, but only by 2.1%. And staying in China, and as expected, the normal January surge in new yuan lending by banks occurred again this year, but by less than expected, and by 8.2% lower than for 2025, 4.3% lower than for January 2024, and was 5.8% lower than what was expected. It is a soft result and is typically followed by a sharply lower level of lending in February during the Spring Festival Chinese New Year period. 2026 is off to a languid and low start for them. Meanwhile, China's export economy is still functioning at full speed. Their current account surplus widened to an unprecedented $242 billion in the fourth quarter of 2025, sharply higher than the $164 billion recorded a year earlier. And India also released bank loan data overnight, and their firms are borrowing up big. In fact, it was up 14.6% in January from a year ago, the strongest surge in a year. And Malaysia reported that its economic activity rose 6.3% in the fourth quarter of 2025 from a year ago, revised up from an initial 5.7% gain and accelerating from 5.4% growth in the third quarter. This was their sharpest expansion since the fourth quarter of 2022, with broad gains in agriculture, driven by palm oil output, and manufacturing and services. On Saturday in the US, CPI inflation came in at 2.4% for the year to January, slightly below the expected 2.5%. Core inflation came in at the expected 2.5%. This result was all due to lower petrol prices and falling used car prices. However, food was up 2.9%, rents are up 3%, electricity prices are up 6.3%, and home gas was up 9.8%. It'll be hard for households to feel inflation is under control. And key will be how the US Fed will interpret this data when setting their policy rates at the next meeting on March the 19th. Markets currently expect a hold, and at least until the middle of the year. And one reason food prices seem higher there than the official data is that the US beef cattle herd is now at its lowest level in 75 years. That helps explain why US imports are soaring and prices are high and rising. And don't forget, it is a long weekend holiday in the US for Washington's birthday, or sometimes known as President's Day. US-based activity will be low tomorrow, and that will show up in our financial markets. The US Treasury 10-year yield is now just under 4.06%, little change from Saturday, but down 15 basis points from this time last week. And the price of gold will start today up $21 from Saturday at $5,041 an ounce. American oil prices are little changed at just under $63 a barrel, while the international Brent price is still just under $68 a barrel. And the Kiwi dollar is little changed as well against the US dollar from Saturday, still just on 60.4 US cents, down a marginal 10 basis points. Against the Aussie, we're unchanged at 85.4 Australian cents. We're down marginally against the yen. Against the euro, we're unchanged at 50.9 euro cents. That all means our trade-weighted index starts today little changed, now at 63.8 and down 10 basis points from Saturday. And the Bitcoin price starts today at $68,565 and down 0.8% from Saturday. Volatility over the past 24 hours has been modest at just under plus or minus 1.5%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.